Hi guys, and welcome to another session of Push the Future by Standard Bank. So today we will be going through an accounting paper. We'll be giving you tips and advices on how we got through our CTA paper. My name is Njabulu Mahlangu. I'm a first year CA trainee here at Standard Bank.
And I'm Naledi Machava, and I'm also a first-year CA trainee here at Standard Bank. So today we'll be going through the financial accounting portion of Paper 1, Question 1, Part A and B, and Paper 4, Question 1, Part 2 of the January 2020 ITC.
Okay.
So we'll start with Paper 4, Question 1, Part 2.
Yes. So Part 1, Part A of our ITC paper, we had to deal with IFRS 15. And I think with IFRS 15, it's fairly standard. The only problem there is just identifying the transaction.
Yeah.
But once you've identified the transaction, it then just becomes a matter of what is your transaction, what is your performance obligation, what is your transaction price, then allocating that transaction and recognizing your revenue.
And I think with IFRS 15, you must just always have those steps in your mind and remember to follow that process so that you make sure that you get all the marks for the question. Yeah.
So in our with ITC, the principal agent IFRS 15 question came through.
I don't even remember answering that question.
No.
I really don't.
Yeah, no, Psycho was not there to play for real. So just a little bit into the scenario. So we had a company called Masterbus. Masterbus had an app, and this app people would then book transportation in this app. From there, the company would then speak to the drivers who would then provide transportation. Now, when people made payment, it was made to Masterbus. So I think the first problem with such a question is identifying when is there a principal agent transaction going on. So in this case, so what I always say is that let's talk about a normal IFRS 15 transaction. So in a normal IFRS 15 transaction, it is the provider and the customer, and I'm giving a service to you, then you're making a payment directly to me. Then in that case, that's your money, you can recognize your transaction. But in this case, you see that there's a person who's providing the service.
A middleman.
And then there's another person who is now a mediator between the two, and that now triggers us that there is actually a principal agent relationship.
So if the money is not going directly to one person, then that's a trigger that there might be principal agents.
Yes, yes. So if I'm not, because the person who's not providing is not getting the actual money. So now the first question that they asked us was, okay, let's just go to the IFRS first. So here in the IFRS, here's the other problem with this transaction is that it doesn't sit with the rest of the IFRS 15, but principal agent sits on Appendix B on its own there at the back.
So you have to have seen it before to be able to catch it.
You have to know what to do. So you will find it under paragraph B35. That's where they defined what is a principal. In paragraph B36, they define the agent. In paragraph B37, they talk about how do you know if control has passed. So it's very important that you go read those 3 paragraphs and you flag them, because if you've never seen them, you will go through the whole IFRS and you will not find them. Okay. So here, the first question was, we should discuss the appropriateness of the accounting treatment, followed by Masterbus to account for its percentage of the transit fees. So what happened here is that we saw Masterbus recognizing the full fare prices as their revenue. Now, the first thing that we had to discuss here was whether Masterbus was the principal or the agent, because if they were the principal, then it's definitely their money and it shouldn't be a problem if they recognize it. So that was the problem. So the first thing they defined, you need to define what is a principal. Again, we go to the what we spoke about last week. In a discussion question, you want to have an introduction. You want to define what your principle is. You want to apply, and then you want to conclude. So that is what you first do. You go to paragraph B35 and say, what is my principle? So they're saying a principal is a person who controls the goods or services before they are transferred. So now we need to ask ourselves, because we then go back to the conceptual framework where we spoke about what is control. And control means that I can restrict who benefits from this. But in this case, you could see just because Masterbus had the app, they cannot control who gets into that transport at the time. So they did not have control. Therefore, it was safe to say that they do not have control over this transportation before it is given to the other person. So they then also go to B37, Now, because we have now proven that this is not a principal, they then also prove that this person is an agent. And then they go through the requirements of what the IFRS says. And that is, I think, another trick. That's the other thing we missed in accounting discussion question, was that you want to go through what the IFRS says. You want to go through those steps. You want to discuss them step by step. Because I think that is where I lost my marks in most cases.
It's the principal part of answering the question.
Yes.
So then you would apply what IFRS says to your question. As we said last week, where you can just put in the company name and that's application, you get the mark. Whereas also don't restate the IFRS, because then you won't get any marks for that. So apply it, put the name of the company into your application and then you'll get the mark, hopefully.
And I think the other thing, because accounting principles are sometimes so long, I would just try to rephrase it so that I just don't spend too much time rewriting that.
Yes.
But yes, you do wanna.
Because sometimes you do get caught rewriting something. Yeah. And in your head, you're just going. But you really don't get the marks for rewriting the principle.
And I think it also, because also time. It takes us back to that time management issue as well. So now, that was the main thing about this question, was really proving that this person was a principal or an agent. So I think that also speaks to how important it is to be able to identify the type of transaction. Yeah. Because if you did not see that, which I don't think I did, then it becomes a problem because you would have lost most of the marks here, right? And also you see the importance of concluding here, right? So so after that, they did conclude that he shouldn't have recognized that full amount because he was not actually the principal or the agent. And I think also the other tricky question with this one is that a transaction like this one is the one that we go through in class once and you never really ever see again. So I would really suggest that you go through this paper before your CTA, because it's one of the few questions where you get thoroughly tested on the principal agent principle. Yeah. Okay.
It'll help you to find triggers if you do see it again.
Yes. Okay. And then the next question, we're going to move on to part B. Like I say, ITC 2020, loyalty points.
Yeah.
I
remember loyalty points was like a paragraph in our notes.
Yes.
And then,
How many marks was it even? I'm trying to see how many marks. Okay, I can't see. It's fine. I have too many papers. I think the biggest mistake with loyalty points is that we forget that it's a separate performance obligation. I think that is very important. Know that it is a separate performance obligation. Why? Because it is a distinct good and service. For example, so let me just go back to the scenario here. So what Masterbus did, part of their app, is that they had this loyalty point. So every time you'd book using the app, they will give you 1 point for every 8 rand spent on the fee here. Then you'll get a point. So so how do we now say, why is it a distinct good? It's because a customer can benefit from these loyalty points with a readily available service, which is the transportation fee. Therefore, it's safe to say it is a separate performance obligation.
I think with loyalty points and with IFRS 15 in general, you must just think of what the customer is getting, right? So even if it is one payment, they're getting that bus trip, but they're also getting points. So you have to recognize revenue separately for those. So even if it is groceries, you're getting your groceries and you're getting points. So revenue has to split between the two of them, even though it is one transaction.
But there's still two things going on. I think that's also important, especially for discussion questions, because then if it was a discussion, you would need to go into that discussion of why are loyalty points a separate performance obligation. Yeah,
practice the theory questions with revenue, because it's very repetitive in how you explain the different performance obligations and all of that. So just practice it and you'll see there's a pattern.
And I also think, because with calculations, it's very easy. When you give us a calculation, we know how to go about it. But when we need to put it down, it's not as easy. So I agree. Work in those discussion questions. So this part B, we basically had to now calculate how the amount that should be recognized as revenue in the records of Masterbus. So now one had to take into account, remember the first question spoke about that they recognized the revenue incorrectly. So I think one part I didn't mention was that Masterbus got a commission, a certain amount from the actual fee that the transportation, for the transportation. So, and then there were also those loyalty points. Now that means that my revenue is going to be made up of both my fees as well as their portion of the fees as well as the loyalty points.
This is for the app, right?
Yes, the app, yeah. So how much would they recognize? So I think here it was very important how you analyze the question, because that would have guided you, right? So I'm just going to go through the question paper because it's a calculation here.
Sorry, just to interrupt you quickly. That's why I say you really need to practice the revenue questions and theory questions in general, because you'll be reading that scenario and it looks like it makes sense and you can answer it. But as you said, there's so many different elements to the question, and you need to make sure that you touch all of them and you speak to all of them without concluding before you've actually answered the question.
Yeah. So I think with this one, so I'm just going to read the part under loyalty program, and then I'm going to talk about how it linked to the overall calculation of what was going on. So now we were told that all app users are automatically enrolled into this loyalty program. So everyone is there. We do not have to worry. For every 8 rands, you get 1 point. So that was sorted. So they're saying the most important one was that an app user cannot earn loyalty points on the trips that are paid for with loyalty points. So that tells you that in determining how many loyalty points you had to exclude those trips that were paid for by loyalty points. So as you can see here,
I don't know how I felt reading this.
And that's the thing, because when you read it and when you have to apply it, it's just you're not sure how it comes together. So you would see, if you go through the memo, they tell you that this is the total amount of trips that we had, and then they minus that trips that were made by loyalty points. So this is when you are determining how much points there are in total.
I think this is when drawing the picture would help. Okay. Just branches, just to show that, okay, this amount, to help you answer the question.
Because I think a point like this is very easy to miss. Chances are you wouldn't even highlight it, you just pass right through it, okay? And then they're saying the loyalty points are awarded on the first day of the following month, in which the transit fare are sold via the app, and the loyalty points expire 6 months after being allocated. Now, how is this important? Remember that once you've issued out their loyalty points, you cannot recognize them as revenue unless they've been utilized by the customer or when they expire. So that they expire within 6 months told you that you can recognize them at the area of them being used or when they expire. Again, that was an issue. We tend to forget that part. So that was very important. That is why it's important to know when your loyalty points expire. Okay? And then they tell you that the transport providers are not affected by the loyalty program. So that gave you some inner peace. And then they gave you information on how many points were given on that year. And I think also the tricky part here was that you had to calculate for 2 months. So your revenue, you had to give revenue for November and revenue for December. And I think the downside with that is if you do not know how to do it, you're going to lose so many marks.
And I think that the loyalty points expiring also comes in when you have to calculate that ratio for the revenue that you recognize, the portion of revenue that you recognize for the loyalty points.
Yes.
Because some of them expire, so they can't be included,
It's just a lot, as I say. It's a nice question. I think also loyalty point questions were very scarce in our year. So I think this is also very good rehearsal. It's very integrated. It's a good
also
one.
With loyalty points, I feel like it's the same process. So if you practiced it and you know what to do, then it won't be as a shock in the paper.
And I think most important thing, I think my takeaway from this question would be always remember that there is separate performance obligation. That is one mistake that we make. Always take into account when do they actually expire or when are they used, so that you know when to recognize. And I think with the expire part, it's the mistake that we usually make. We forgot, for example, if they expired the prior year, we forget to recognize them, and then we just focus on this is what was utilized. But remember that for loyalty points, we recognize them for revenue in 2 instances, when they're utilized and when they expire. And cool. I think that's it for paper 4.
Paper 4, okay, cool. So I'm going to be looking at paper 1, question 1, part A and B. So pretty much what this question was looking at was prior period errors, so that's IS 8, and equity accounting for associates, the journals of that, right? So both these topics are undergrad topics, so topics that we did in undergrad. So those are the ones that always just shock you a bit when you see them in the paper, because obviously you're so busy revising your CTA topics that you sometimes forget, or not even forget, but pay less attention to your undergrad topics. So especially IS 8, IS 8 always comes up. IS 8 always finds its way into the papers. So in this paper, it was a prior period error. So it happened in 2018 and the current year was 2019. So it's very important to look at your dates, right, for prior period errors. And I think the trickiest part of prior period errors is actually finding the error.
Yeah.
Because sometimes you'll read the paper and everything looks fine. Then you read the required and it's asking for a prior period error. You're like, where's the error? And
it's sad when they don't even tell you what the error is. They just like prior period
give the
error.
Prior period notes, yeah. And you didn't catch the error. So that's always the trickiest part. So always just have IS 8 in the back of your mind. Just have it in the back of your mind. Have it flagged, have it highlighted. So if it does come up, you can easily open your IFRS and it's there.
And I think also illustrative examples, they're very important because I know that they do give you a structure of how your notes should look like. So I think also that was one thing that we neglected in CTA. We'd focus so much on those IFRSs and forget those illustrative examples. They're really helping when you're under pressure, when you're not sure how to go about it. Quickly, I think go flag your illustrative example so that you can quickly page through and find what you
I think maybe look through the index of your illustrative examples, and then all the stuff that you know just stresses you out. Maybe just go check them out. Maybe there'll be an example or something there to help you out.
And also with illustrative examples, it's not really easy to find things on the day of the exam. So that's why it's advisable to just flag it beforehand so that you know how to find your thing.
Go through it before so you know that it's there.
Take some time.
So in this question, they had bought a computer and they had incorrectly expensed the installation cost when they were supposed to capitalize it, right? So as I said, you need to make sure that you're aware of the years. So this was done in 2018. I think it was 1st of Jan 2018. I might be wrong. And then we were in the 2019 year. So it was prior period error, and they expensed that installation cost when they were supposed to capitalize it. So they asked for the prior period notes, right? So with the notes, with prior period errors in general, I think you need to practice it. Look for a TAT or a past paper that has the notes so you can see it and you know what you need to put in. I don't know if it's in the illustrative examples, it might be, just check. But just look for a TAT or a paper that has that note there so you know what it looks like and you know what's expected of you. So when you see the structure, you'll see the first thing, don't forget the story. And that's like an easy one mark, just saying that there's an error here and here, what was supposed to happen, how you're going to fix it, right? So don't forget that story, you'll get 1 or 2 marks. I think in this paper you got 2 marks for the story. And then you just give the effect on profit or loss and you give the effects on the financial position, right? And what you mustn't forget with prior period errors is that don't forget the tax part, right? Don't forget the tax part and the deferred tax part, right? So with this one, as I said, they expensed the installation cost when they should have capitalized it. So if you expensed it, that means that they claimed a tax deduction also. So you need to reverse that tax also and reverse the expense. So what I would recommend is that you look at what was done and what you were supposed to do, right? And then you can then find the effects on how to correct, right? So the nice thing about this paper is that they actually gave you exactly what they did, so you didn't have to now look at or write down what they did. You just need to know what they were supposed to do, and then you were able to go through that.
Because for me, when it was a prior period error, my workings would be literally journals of what they did and what they were supposed to do. But I think in this case, because they told
gave
you
us what they
just
did.
what they were supposed to do, then the difference is what you said. That is your answer.
Yeah, I think that's definitely like the best way to go about any like correcting journal entry question or even prior period errors. Just go through it like that and you'll be fine. What they did which was wrong and what you were supposed to do, and then the errors and then the adjustments to fix it. And don't forget the depreciation also, because it was an installation cost, it was supposed to be capitalized, so there's a portion of depreciation that wasn't accounted for, so you need to increase that. And then remember, there's also going to be a deferred tax part of that too, right? And then the second part of paper 4 was looking at equity accounting for associates, right? So that's also a third-year topic or undergrad topic. So in this question, it was ABM Group, and they told us that they had 5 subsidiaries, and they had an investment in a company called ICV, right? So then they also go on to tell us that they purchased 35% of ICV's issued shares, right? So already then you would draw the structure just to see what's going on in the group, draw the percentages, draw acquisition dates, maybe even a timeline so that you can just order your thoughts so you know what's going on, you know what's supposed to be accounted for as a subsidiary, what's supposed to be accounted for as an associate. So draw the dates, draw the percentages.
And also
then
because you don't know how the question will go.
Yeah.
So you might be focusing on that subsidiary only to find out if the question is on an associate. So when you have a table, you do not need to go back and now start reading your scenario again. It saves you time.
Yeah, it saves you time. So when you saw the 35%, because they said they purchased 35% of the issued shares, that should trigger associates, right? And associates should trigger equity accounting. So the nice thing here is that we were told that it was an associate, so you don't have to think about that now. You know that you're going to equity account. So just start thinking of what you need to do for equity accounting. So in the question, they told us that the consolidation of all the other subsidiaries was correct, and it was done for the group, and only the equity accounting journals were not done. So that's the only thing you focus on. You don't go now try to do a console and get marks because it was done, it's done. So we're just going to do the equity accounting journals, right? So they asked for the pro forma equity accounting journals, and it was 22 marks. So that means they want to see all of the journals from acquisition. So from acquisition and then dealing with whatever happened in the scenario, which I think was a downstream sale. That was a downstream sale. So that's all of your journals. It's 22 marks. Don't forget workings, refer. I used to have a whole page of workings where I'd label it workings. Then you put references and you have all your workings there because that's really where the marks come from. So just remember to do that.
And I think also for me, equity accounting is that journals for equity accounting were very weird for me because usually you debit bank and you credit asset. But in this case, with equity accounting, you're usually not allowed to mention the other person's line items. So how I always thought about it is that if I'm I'm the associate, my line items I can mention, but every time it's the other person's line items, I just say a share in associate or investment. Share of profit or investment in associate.
Yeah, so here there was a downstream sale. So as I said, draw the structure so you can see. So it was ABM, ICV, downstream sale. And what our tutor once told us was that, and I don't know, use it if you can, but when it's a downstream sale, it usually touches balance sheet and then it's investments in associates. And then if it's upstream, it would be income statement, so it would be share of profit. So as you said, if you as the holding company it doesn't affect one of your line items, then you would label it as either investments in associates or share of profits, right?
Yes, so I think it's important to know for who are you doing the journals for. So for whoever I'm doing the journals for, I mention their specific line items for the other person.
Yeah.
Just in case.
And for this, look for questions that deal with both upstream, downstream, where they look at the accounting for the holding company and the associates and look at both sides so you can see how to do it. And then you'll be able to pick it up when you see it in the paper. Then they ask for the balance of the investments in associate also. So what you must just remember with equity accounting is that the balance of associates is usually made up of your initial cost, plus minus profits, and then plus minus any other adjustments such as downstream sale or upstream sale adjustments, minus your dividends would give you your balance. So yeah, that's pretty much all I have on associates. And for paper 4, just practice it. Look for questions that look exactly at it. Yeah? And for me, with accounting in general, I'd always get so stressed because it's such big questions. Like there's such big questions and they usually all relate. And you'll read a paper and you're like, I know how to do this, I know how to do this, I know how to do this. And then it's time to actually start writing. You're like, share capital. You take your things. You don't know where to start. So with accounting, I think with the other subjects, I never used to like doing a full paper because I just don't feel like it is necessary. I do parts of papers. But with accounting, you need to sit and do the whole paper because that's how it always comes up. So your mind needs to be used to the flow and just having a whole bunch of information and working through it nicely and properly.
And I think also with CTA, the main thing, especially at this point, it's now a time story. Like you hardly have time for anything. So what I did is usually with this task, they give you a breakdown of what's being examined, I would try to find a good mix of my CTA work as well as my undergrad work, so that I know when I read that scenario, I'm going to be revising while also practicing my work, also my current year work. So it's really good to mix it all up. And I think also CTA is a hard year, so the advices that we get also count a lot. So I thought today I'm going to share the best advice that I got in my CTA year, and it was from a first year trainee at that time. And she said to me, do not worry, this is how CTA is supposed to be. So when you fail that test one, when you fail that test two, just understand that is the structure. All of that is preparing you for the year end. Just know that CTA is not over until that final exam has been marked and those results are out.
Yeah, and find what works for you. Find what works for you. We can tell you what we did, but that might not work for you. Whatever works for you. Do it and you'll be okay. And yeah, guys, that's all we have for today for financial accounting. Please do join us next week. We'll be looking at management accounting and finance. We'll be looking at those parts of the January 2020 ITC. So I hope today was helpful, and we'll see you next week. Thank you.